What's up, YouTube? It's Haim of Haim Investment Advisors, back with another video on the internet and companies with names you might actually know, even if you are not a tech bro, finance bro, are talking about going public or having an IPO, an initial public offering. That's where the company goes from private to public. Talking about SpaceX, OpenAI, Anthropic, Stripe. And the reason people are paying attention, it's not just because the companies are famous or the fact you probably already know what the companies are. It's because of the scale of the proceeds, the price tag. We're not talking about the normal IPO where nominal billions or hundreds of millions of dollars are raised in the sale for the company. We're talking about trillion-dollar price tags plus some of the biggest stocks to ever go public and day one of their life as a public stock becoming some of the biggest stocks on the US and global stock markets. We're talking about the mega IPOs, and we're talking about this because so many people have asked me, should I care about this? Should I buy the IPO of SpaceX, Anthropic, OpenAI, whichever it is? We're going to talk about it and whether you need to care. So we got to do jargon. We got to define what we're talking about with a couple of these words. First one's IPO, just initial public offering. What is it? It's the first time the public has an opportunity to buy the stock. It goes from private to public. Investors from the public markets become invested in the stock for the first time. It is the first opportunity you and I have to share in the profitability of the firm. The firm gets cash proceeds from the sale. It's why they do it in the first place. They get to do things they want to do as a firm, buy new investments, invest in their company, hopefully. But in general, they have cash. They also do it because this is the first time that insiders, so investors from the early days of the firm, people who have, for whatever reason, accumulated shares that frankly were monopoly money until now, they go from monopoly money to real money. These are usually key personnel, people who the company has thrown shares of equity at those people to keep them around. Some of them are the owners, the managers of the firm, or just investors, like we said, from the early days of the firm. This is their moment to kind of cash out and finally have a market for these things that they've already owned. That's why it's a big deal for them. And it's one of the reasons that companies do it in the first place. The other jargon we got to name is mega. It's only mega because of the size. It's the only thing that distinguishes a mega IPO from a vanilla IPO. The biggest global IPO that happened thus far was not that long ago. It was about 7 years ago. This was Aramco, which came to the market with a 1.7 trillion USD price tag. The biggest one in the US was Alibaba, Chinese tech stock. That came in the, about 100 plus billion, so quite large, but not even in close fraction the size of the ones we're talking about right now. And basically, this is the first time that you and I get to invest in the companies that stayed private for quite some time. They stayed private for a large amount of the kind of capital value formation period. That's been a trend in markets for some time, really since the 1990s. And it does kind of point you towards some of the lenses you should be applying to these firms as investments and the impact they're going to have on just everybody as investors. So let's talk about history of IPOs, what we can learn from history about IPOs that have already happened in general and more recently. Researchers and academics, they like to, in recent time, highlight IPOs like Uber and Meta when these stocks came public. Maybe some of you even remember too well. These stocks pretty much plummeted right out of the gate. Took a year to even break even with their IPO price. And this is actually a pretty common phenomenon. In fact, researchers, there's any number of studies you could go read. Some set the time frame at 5 years, some set it at 10 years, but there is a period of documented underperformance for the average IPO. And it's not a short amount of time. It's usually a long amount of time. 5-10 years is an eternity in market terms. And as investors, having confidence in something that plummeted out of the gates and took 10 years to break even with the market is not a great feeling. Most people are not going to stick around for that. And why does this happen? There's a number of different rationales you could find out there for what drives this underperformance. I like the one that says, well, the market doesn't even know anything about these companies except for what maybe people from the firm have come out and said. The narrative may have existed about how profitable the company is, but we don't even know how profitable it is as public investors until the IPO process has begun, until they first start making disclosures. And it even takes a while. If you've read some of the more recent IPOs like SpaceX, it takes a long time to wade through that, and especially some IPO language has become less financial, is more like sci-fi. Frankly, if you've, like I said, taken the time to read Elon Musk's work in the most recent IPO stuff, we don't really know, frankly, what's going on. The market doesn't know. Analysts don't know. For some amount of time as a public firm, it takes a while for the market to actually have a correct assessment of what is going on with the financials of the firm, which long-term drive the price of the stock. That's one explanation. Sometimes there's another one. Some people like this explanation that, like we just said, the whole reason for the company going public may be that the people who own the shares of the company, they've been giving these shares, and maybe it's a big slice of theoretical compensation. They haven't had any way to turn this into actual money yet. And so they might actually be pretty persistent sellers early on, at least for some amount of years. And some of them have stocks that are vested over 3 to 5 years, starting the day that it goes public in the first place. We've had some prominent firms that have done this in recent years when they go public for their insiders, and people have these restricted stocks. Sometimes it might take the market a while to digest that extra supply and understand the impact that that's going to have, and understand how frequently insiders are going to just be doing this because they need money. That's an impact potentially. And, some IPOs don't actually underperform at all. And in fact, one of the important dissidents among academics who've said it's not a real anomaly. This is what Eugene Fama said about IPOs. This is, you can't actually see an anomaly where stocks per se underperform all of the time. What he said was stocks will underperform if they are not profitable, just like any other stock. Any stock that is poor investment quality, low profit, high leverage, weird accruals, it basically profits coming just from accounting. This stuff is going to make the stock underperform, whether it's brand new to the market or whether it's been there for 30 years. That's going to be the real determinant of profitability for you as an investor, is profitability of the firm. How much are you getting paid as an investor? We can draw a straight line from that to what the company makes in the first place. And so that's another important lens to apply to these IPOs as they're happening. Unprofitable ones are probably going to exhibit that phenomenon. We're saying it's not an anomaly because we're listening to Eugene Fama here, but the idea that they might actually underperform for some time goes with their profitability. If we have some of these come out, maybe a company like Stripe, not that I know anything about that stock, let's say Stripe comes out, is incredibly profitable. Well, it's probably going to defy that logic of expecting it to underperform for really any amount of time because it makes money. So we're finally getting around to why it matters to you. And here's the thing that I think probably matters to you the most. Even if you don't go out and buy one of these mega IPOs, you'd never jump in and you've never bought an IPO before and never will, it's still going to affect you. And that's especially if you own index funds. And I like index funds. Many of you have them because I've told you to buy them before. And, here's why this actually matters to you as an index investor. Indexes like the S&P 500, other big ones out there, the Russell, the NASDAQ, they get to decide what's in the index. They have a board or not. In some cases, that might be stringent or not. But traditionally, there are decision makers and rule books for what gets in there and what it doesn't. And traditionally, there have been guardrails against exactly this kind of mega IPO conversation in the past. Some of those have been talking and, they'll be deciding maybe even right now as this video goes public whether or not they're going to change the rules to allow some of these really big IPOs to hit indexes early on, within weeks, days. And so some of them may change the rules. They may end up there, but even if they don't, at some point, they probably are going to get included in some of these indexes. Some of them sooner, some of them later, but they will be there. And index funds, broadly speaking, many of them have to buy things that are in the index. Many of them don't. Many of them use sampling techniques that might somewhat sidestep or a lot sidestep buying a company like SpaceX that, might bum investors out early on in his lifetime as a public stock. But most of them are going to be buying the stock if they're an index, because we're talking, like we said, about maybe top 10, at least top 15 stocks for some of these day one as soon as they come to the market. So index investors are going to have these. The job of an index is to track the index, to track the category. So if a giant company enters, it's probably going to get included. This includes global indexes too. Global usually means US plus everything else. And these absolutely are going to be in global indexes as well as pure US indexes. And like we said, they're going to be in the top 10, even among global indexes, like right away. And so that's one of the reasons you should care, is if that's you, you're highly indexed, you're going to have exposure to these probably sooner than you might actually want. Like we just said, with profitability, underperformance, yada. Some of you will actually be bummed out by that, and that's worth examining, I would say. So yeah, regular investors, should you care? Yes, I would say you should, but probably not in the way that like headlines suggest. If you follow a lot of influencers and social media folks about investing, it probably doesn't matter in terms of you should actually run out and buy this. In fact, I say this is not a once in a lifetime opportunity. The going public part is not your chance to like get in on the ground floor or anywhere even close to that. That's like what's in the name mega, right? Is implicitly a lot of that value creation already happened, and you're like paying the people who have been waiting for a payout for a long time. You don't need to feel the pressure to like get in early or get in, frankly, at all, aside from, like we said, index exposure and just market factor exposure. From my perspective, the get in early investors were the private investors when it was a private firm. People who just got it as a consequence of having a job there. People who proactively invested in the stock managers. These are the people who are the ground floor people. And yeah, great for them. This is a great day for any such person that's been waiting for this to happen. Awesome. Frankly, if you want to become this person, you can. You can talk to people like I'm Investment Advisors. We could talk about how do you actually become a early stage venture capital private equity investor. There are vehicles out there and opportunities. If this intrigues you, if you're getting excited about the IPO because this looks like, oh, this could be a great opportunity, that's probably the real conversation to have. It's not about these, it's about the next one. There are dozens or hundreds of firms that are going to be staying private for some amount of time, simply because the market has, with these mega IPOs, kind of signaled it is perfectly happy to just buy way late in the game, cash people out way late in the game, and give a ton of money to those investors. You could be one of those investors if you feel like it. That's probably the conversation to follow up with your financial advisor. Like I said, I get into that space if that's something you want to explore. We've never talked about. That should be on the agenda for next time we talk. But I like to say you should always have the profitability lens on what you're doing as an investor to some extent. I'm a huge fan of Novi Marks and academics who have said, look, quality, profitability, these things actually determine your outcomes as an investor, no matter what sector or theme or whatever we're talking about. That is one of the main drivers of investment outcomes. You should be having that lens, whether you're talking about IPOs or something that's been around on the market for 100 years. You should probably be using that same approach. And big conclusion, big takeaway. Here's the big takeaway. Mega IPOs matter. They are important to me because they can reshape markets. They affect fund flows. They influence how indexes get constructed. Sometimes they even change the rules around some of these really big IPOs, like we just said, big headlines. They can become major public firms pretty much immediately. And I think one thing that people forget to look at and think about in terms of what's going to happen from these IPOs is that when you have $1 trillion IPO come to the market, the $1 trillion got to come from somewhere. An IPO does not create new money. And the IPO dollars have to come from somewhere. They got to get reallocated, be that from stocks, from bonds, from global, whatever, from other private equity they somehow get access to liquidity from cash that just doesn't have a job already for some reason. The dollars got to come from somewhere, and that's a lot of dollars to come from somewhere. We just said there's only 9 companies that scale anyway. That can have pretty interesting, unpredicted results for markets and unpredictable effects on many different markets, not just the stock market. We all know what those will be. There are analysts who have speculated on this topic. If you read Morningstar, you can go read the analyst coverage on there. I'm not going to report on everything that they've said in terms of what they think is going to happen to the other stocks. Alpha Spread has coverage on this as well, alphaspread.com. If you use them to kind of aggregate analysts and what they think about different stocks, wherever you go to get analyst coverage, there have been some suggestions about specific firms that are vulnerable to reallocation, and I find that fascinating. I'm not taking a lot of particular action on that because I tend to use other lenses on investing, but I do think that it will have unpredicted results that people got to be keeping an eye on in the first weeks of these IPOs in terms of what's getting sold to buy these things. For most people, don't run out and buy the thing just because, like we said, it's not your great opportunity or best opportunity to buy these things. Usually, if you're interested in buying them along the way, buy them when you have some evidence that they're good. And like we said, there's not always robust evidence of what even is happening early in the game, in my opinion. And if you're interested in becoming a pre-IPO investor, like we said, it's a conversation you have with your financial planner, your investment advisor, folks that you work with in investment counsel, or just get into it. If you are an accredited investor, for example, you have a lot of opportunities. And if you're watching the I'm Investment Advisor channel for some reason, give me a call. And if you've been wondering what to think about the mega IPOs, that's what to keep in mind. Care about whether these companies make money in the first place. And if none of that made you care about mega IPOs or any other IPOs, way to be. Good for you. That's great. And that's all I got for you. Till next time.